What if the biggest safe haven battle of 2026 isn't stocks versus cash, but silver versus gold? And what if most investors are already on the wrong side of history? In a world where inflation refuses to disappear, debt levels are breaking records, and trust in paper assets feels thinner than ever. One question is taking over global markets. When fear returns, will money run to gold like it always has? Or will silver finally steal the spotlight? Stay with me, because by the end of this video, you might see these two metals very differently. Welcome to Global Economy Insights, where we break down global markets in a simple, clear way. Before we dive in, please take a quick second to like this video and subscribe. It really helps us reach more people who want to understand the global economy without all the noise. For thousands of years, gold has been the ultimate safe haven. When empires collapsed, currencies failed, or wars reshaped the world, gold survived. It doesn't rust, it doesn't depend on technology, and it doesn't need trust in governments. Even today, central banks are buying gold at record levels, quietly preparing for a future that looks less stable. Gold's strength in 2026 is expected to come from the same forces that pushed it higher in recent years: persistent inflation, rising geopolitical tensions, and massive government debt that makes investors nervous about currencies. Many experts believe that even if inflation slows, it won't return to the ultra-low levels of the past, keeping gold attractive as a store of value. At the same time, if interest rates peak and decline, gold historically performs well. This is why some forecasts see gold holding strong or moving higher in 2026, especially if global growth weakens. But gold is no longer alone. Silver brings something different to the table, something far more explosive. Silver is not just a safe haven metal, it's also an industrial metal. That means silver lives in two worlds at once. On one side, it benefits from fear and uncertainty, just like gold. On the other side, it benefits from growth, technology, and the green energy transition. Silver is essential for solar panels, electric vehicles, and electronics, things the modern world can't function without. The key to silver's potential is the gold-silver ratio. Historically, this ratio has averaged around 60-1, meaning it took 60 ounces of silver to buy 1 ounce of gold. Today, that ratio is much higher, often above 80-1. This suggests that silver is significantly undervalued compared to gold. If the ratio returns to its historical average, silver's price would have to rise much faster than gold's. So, in 2026, gold remains the king of stability, the ultimate insurance policy. But silver is the wild card, the high-potential challenger. If the global economy stays strong, silver's industrial demand could push it higher. If the economy weakens and fear takes over, its safe haven appeal could kick in, and its undervaluation compared to gold could ignite a powerful rally. The biggest risk is also its biggest strength, its industrial side. A severe global recession could hurt demand for silver in the short term. Ultimately, the choice between gold and silver in 2026 depends on your goals. Gold offers stability and a proven track record. Silver offers higher risk, but potentially much higher reward. Many smart investors are now considering a bit of both. As countries push harder toward green energy and electrification, silver demand keeps rising. And this demand is not theoretical. It is physical and measurable. Many analysts are already warning that the silver market is facing a structural supply deficit, where demand is consistently higher than new supply coming from mines. Unlike gold, most silver is mined as a byproduct of other metals, which means production cannot quickly increase even if prices rise. This creates a powerful setup for volatility. Historically, when silver moves, it moves fast. It often lags gold at first, but when momentum builds, silver tends to outperform by a wide margin. That is why many experts believe that if a true safe haven rally begins in 2026, silver could deliver higher percentage gains than gold, even though it carries more risk along the way. When we look at macro drivers side by side, gold responds mainly to monetary policy, inflation expectations, central bank behavior, and global instability. Silver responds to all of that, plus industrial demand and supply shortages. This makes silver more sensitive to economic cycles. If the global economy slows sharply, silver can initially struggle. But if governments respond with stimulus, rate cuts, or money printing, silver often rebounds even stronger. Gold, on the other hand, tends to move more steadily. It is less volatile, more trusted, and favored by institutions and central banks. This difference is crucial for investors to understand in 2026. Gold is about preservation. Silver is about potential. Forecasts from various market analysts suggest gold could remain in a strong range or gradually climb, supported by long-term uncertainty and declining trust in fiat currencies. Silver forecasts are wider and more dramatic, with some experts expecting silver to significantly outperform gold if investment demand accelerates and industrial demand continues to grow. The gold-to-silver ratio, which measures how many ounces of silver equal 1 ounce of gold, is another key indicator. Historically, when this ratio is high, silver is considered undervalued relative to gold. Many analysts believe that if this ratio starts falling in 2026, it could signal a powerful silver rally ahead. But this does not mean silver will replace gold as the ultimate safe haven. Instead, it suggests that the safe haven race may no longer be a winner-takes-all game. In times of extreme fear, gold still attracts the first wave of capital because of its stability and global acceptance. Silver often attracts the second wave, when investors look for higher returns and are willing to accept more volatility. This dynamic creates an interesting balance. Conservative investors may continue to favor gold for protection, while more aggressive investors may lean towards silver for growth. Some experts even argue that the smartest strategy in 2026 could be holding both, using gold as an anchor and silver as a booster. As we move closer to 2026, the key question is not just which metal will win, but what kind of world we are entering. If uncertainty dominates and growth remains weak, gold may continue to shine brighter. If inflation, stimulus, and technological demand accelerate together, silver could surprise many people. The safe haven race is not only about fear anymore. It is about how fear and opportunity intersect in a changing global economy. And this is exactly why these metals are becoming more relevant, not less. If this analysis helped you see the bigger picture, don't forget to like and share this video with someone who follows gold, silver, or global markets. Your support helps Global Economy Insights grow and bring you more clear and honest market breakdowns. Also, tell us in the comments which metal you believe will win the safe haven race in 2026, gold or silver, and why. Thanks for watching, and we'll see you in the next video.